So with that, let's get started. So how did we start sentiment timing? I had first, my name is Gary Dean, and I started. I still run Markets Path, but I'd been following Woody for years, and it was really when I was a financial advisor, and he had one of his salespeople had called my office, and I ended up picking up the phone, and they gave us a free username and password to go over, look at his reports, and I was absolutely floored when, I was watching these dates that he was predicting, and these turns were taking place right on them. So I had continued to follow him afterwards. And then I wanted to see if he would be interested in moving this more to a retail end of things, because he was doing it just for institutions. And like I said, they're paying as much as $25,000 a year for his information. And he decided that it was something he was always looking into, and that's how we started sentiment timing. And I read his book. It's was really good. I realized that it's a lot of work to be able to do what he did, and that's why I wanted to simply join forces with him. So at sentiment timing, what we believe is that human beings and the markets are irrational, and there's always going to be an irrational element at work. And that is what creates these market opportunities. Now, the way that we do it is different than what anybody else does, because they don't really have this information. And we use Woody's sentiment database that really tracks how traders are feeling about the market. And the from there, we use his technical turn dates, where he predicts when these markets are going to reverse, and then we combine them with our regular technical analysis to figure out where. Now, these dates that are out and everything, no, they're not going to be 100% correct. We don't try to set the wrong expectations and say that these are going to be right 100% of the time. No, they're not. But what's going to happen is when these term dates, or let's say one of them fails, it doesn't really change the overall playing field, meaning that if we are expecting a low to hit, say, February 8th, and the market continues lower, does it make it safe to be shorting? Absolutely not, because we were expecting a turn up. You're able to look at what sentiment is and how that is. And when everybody's bearish on the market, you don't want to be getting aggressive on that side. I don't, it's hard to explain why, but when everybody gets either very bullish or bearish on this market, it's a warning sign that there's a pending reversal, and we have the technical turn dates to be able to back that up. So even though a lot of these dates that Woody puts out, I mean, like, you'll, if you become a member, and even some of the free stuff that I've given out, uh, they're amazingly accurate, and they usually do happen right on those dates. But you give a little bit of room here and there. You don't want to be anchored to that date, and just know if it's a pending reversal to the downside or the upside, and it doesn't happen on that exact date, it doesn't really change the dynamics of things. We're still looking for the reversal. It's just a different time period, and it usually within a few days or so. But then we just use your regular technical analysis to try to figure out where this turn can play out. So that is, really what I mean by when I say making better trading decisions. We're not a buy here, sell here type service. We're more, listen, it's safe to be looking for a bottom here, get your choice of stocks or ETFs, whatever you do, and start building some type of a long position. when the markets are supposed to reverse, it's the same thing. But you have to make your own trading decisions. It's not something that we do with this, and Woody never really wanted to get into it. So the market timing, or our matrix that we use, is time, and that's what I was explaining to you with the when to expect these markets to reverse, and that is through Woody's, technical timing indicators. Sentiment, again, it's how traders are feeling about the current trend, and we have that old saying that when there's too many people that are on one side of the boat's going to tip, and the same thing really holds true with sentiment. When there's too many people that are bullish or bearish, it's it, more times than not, it does mean that there's some type of reversal that is pending. And then the price is just a technical analysis, the divergences, support, resistance, and that I'm going to put this all together in this in this little webinar, as far as how I use things and how it works, and it's really been pretty successful overall. So Woody's been in the business for over 35 years. Like I mentioned, he's a best-selling author of behavioral trading and one of the pioneers in sentiment. It's something that you're starting to see more and more now. People blurbing out stuff about sentiment. I've been hearing it often lately, especially with the drop that we've had, where we have these people coming out and saying sentiment hasn't been this low since 2009. What they're doing is basically just lying to you, because they really have absolutely no idea how to even back that up. I mean, what are they? Because five of their clients are saying they want to sell, so sentiment is at the lowest levels. That half these people that are on TV have absolutely no idea how to gauge sentiment. They don't have anything to track it. There are, say, like other sentiment systems out there, like the AAII and stuff like that. But the problem with those are you really don't, it's not the same people that are, say, logging in and saying they're bullish or bearish on the markets. And that's one of the biggest, say, differences between Woody's sentiment and basically everybody else's. Are It's been the same people that have been giving these sentiment readings, and one person represents hundreds, if not thousands, of people based on their job positions and based on what their clients are doing. So the one listening poll, when you add all these up, ends up being tens of thousands of the sentiment readings, and that's how things that's how Woody gets his sentiment data. So he's considered by many on Wall Street as being one of the best market timers in the world. And anybody that's been following us pretty much knows we have the USA Today had labeled him as the stock market shrink, and it's really what he does. He looks at the psychological phase of the markets and how people are thinking. And since he studied it for so long, he's able to make these predictions on, when these things are going to be turning. So, he's been featured on just about everything. I don't need to throw out all the accolades on it, but he's been on every financial media station there is. So what is sentiment? Sentiment is basically how traders feel about the market. And the biggest difference, and one of the things that I love about, when I make my own trades, I'm reading the reports just like everybody else. I don't, I don't have the information that Woody has. He provides it to me. I put it into the website, and then we send it out to you guys. But when I get them, I'm reading it because I'm learning just like everyone else what he's thinking. And the big part about sentiment is it's a tool that nobody really knows. Like I said, there there's a handful of sites that even track sentiment. Out of those handful, most of them are useless, and there's no way of doing it. So the technical indicators are based off of price. That's just the way things work. Sentiment is based off of it measures human emotions, and if you take a step back and think about it, I mean, one thing you can ask is what makes the stock market go up and down? And I don't care who you are or how you try to answer things, it's sentiment. Because if people are bearish on the market and they believe that the market is not going to go up, it's going to go down, their emotions are going to make them sell. That's going to make the indexes go down. When they're bullish on the markets, they believe it's going to go up and they buy, and that's what makes things go up. So the whole market is made up of human emotions. No matter how you slice or dice it, that's what it is. So being able to track and see how traders are feeling, because they get into an irrational state, the euphoria when things are bullish and they don't believe that the markets are ever going to go down. So they just buy everything because why do they believe that? The financial media, they have, their salespeople coming out and telling them, just buy dips. They have to tell you that, because if they tell you to get out, they get paid on keeping clients in the market. So getting your information from the financial media and reading these whatever blogs are out there, a lot of time that's going to get your emotions going in the wrong direction, because you're going to be reading people, let's say the market's moving up and they're saying, oh, nobody's going to be, what's the sense of selling anything? The market's only going to go up. And it doesn't, it's really, it doesn't mean that it's going to go up. Usually that means that's when things are going to be reversing. So anyway, extreme sentiment readings does not mean that price has to reverse. It's a warning sign sometimes that has to be interpreted, and that's what Woody does. It's what he's been doing for over 40 years. So just because you get a high or a low sentiment, it doesn't mean that you want to start shorting or going long the market. But when you have a technical turn date that's matching up with the sentiment extreme, and then on top of that you have regular technical divergences or support resistance, it increases the odds of that reversal actually taking place. And tracking both intermediate and shorter term sentiment offers a clear, say, picture of when things are, when a reversal may be near. So sentiment from what I look at it, is the missing link in market analysis. Like I said, there's not a lot of people that follow it. So just by following sentiment and understanding how traders' emotions affect the market gives anybody an unfair advantage. Because the way that I try to explain it to people is, it's like playing Texas Hold'em and being able to look at your competitor's cards. It's just the way it is. And since nobody really understands sentiment or how to use it, it gives you this advantage that that not a lot of people have. So sentiment, it's data only. It's a component of the market equation. And like I said, just because you get a high or a low sentiment reading doesn't mean that you have to automatically go long or short. But when you start combining it with the technical turn dates and regular technical analysis, that's when it starts giving you a clearer view. So Woody's been collecting his data for over 40 years, and it should not be confused with any other sentiment data that's out there, because, like I said, it's been the same. He's been gathering the same sentiment uh, interpretations for 40 years. It's been the same method that's been going out, so it's been very consistent. And it's as much as sentiment isn't a trading system, it's a very powerful tool that you can diagnose the markets. And like I said, having someone like Woody that knows sentiment, knows the psychologies of the market and how things work off of sentiment, it is it's a much more relaxed way to view the market. So really, the way that I just want to kind of give you an idea of how this all works is the sentiment is collected through daily polling processes. And let's say 100 listening posts, but these listening posts may consist, this one person may be dealing with institutional clients and he may have 100 of them. The other one may be brokers. So all these come in and they go into the database. From this, that's where the sentiment data actually comes out, and that's what we show everybody on it. So this is a short-term sentiment chart right here. And this changes a lot more than the intermediate term, obviously. But what you can see is that whenever the markets are at these lows, you're going to get, everybody's bearish on the markets. They're looking for crashes. And when they're here, this is when you want to start looking for bottoms, especially when they're lining up with a technical turn date. Now, vice versa goes is when they're on the upside. But here you can see we had a 90% bullish reading right off these lows. This was not a short right here, but when we start going into the 89 and the 96, these were technical turn times, and from there we did get a turn. So you pay attention to these when the markets are scheduled to reverse. You ignore them when they're not scheduled. So this off the low, we were expecting the bounce. So the 90% was not a short. You wanted you had a good idea that things were going to continue higher because the technical turn date wasn't coming till here. But this is the short-term sentiment chart that goes out, that we put out every Tuesday and Thursday, and these change. And like I said, if the bulls hold up the markets today, there's probably a real good shot we're going to start seeing some high sentiment readings, because this will be the first 3-day rally I think we're going to have in all of 2016. So the intermediate term sentiment. Now this is where you get these rallies that that can go. You want to see where everyone's what they're feeling on an intermediate term basis, and what these squiggly lines are and stuff. This is what Woody's projecting based off of future, say, turn dates and stuff like that. But here you can see this little bounce right here brought intermediate term sentiment into levels that were where the S&P was a lot higher than it was. So it really kind of solidifies this all in, all out environment, and it's happening with sentiment as well. So this is the intermediate term chart of the sentiment, and again, this doesn't change a whole lot. But what it does, gives you an idea as far as where people are thinking on it. So now let's move over to the time aspect of things, and this is when to expect the market to reverse, and these are the technical time dates that Woody puts out. So I'm going to show you, I think, probably the best way to do this, because I can't give you the equation because I don't know it. Woody comes up with these things, and he's the one who puts the dates out, and they're based off of previous moves in the past, and the markets repeat itself over and over, and he's able to look back hundreds of years and see patterns as far as on a yearly basis, and then break them down into a monthly and almost into a weekly time period to predict when things are going to reverse. So let's give you an example here, and this is going back on August 4th, 2015. And on this, what he was saying was that there was a potential trading target or sell zone that was due to come between August 14th to the 21st, and he was calling it the kill zone. So the timing aspect of this going on from August 4th was we could rally into these dates, and then from there, the kill zone, we were looking for a very sharp decline after that. So if we just take a look at what took place, and this was the 4th. This is when the report came out. Here was the kill zone right here between the 14th and the 21st. And you saw what happened right here. We saw I think one of the largest drops that the S&P saw since really the last black hole, which was September of 2014, which I just showed, and Woody predicted that one as well. But again, from here you can see, so we dropped, but this was the area where things were supposed to break down. And this is what I mean by the technical time dates. You knew during this period, even as we made a big bottom here with the long, this was a bullish tail. And I remember everybody was bullish on this market because of this candle right here and because of where the market was going, but it was a trap. That's all this was. And from there, if you were positioned correctly, you made a ton of money. And I think it's one of the testimonials that are on there. Somebody made something like 4,000% on their options and turned it's one trade and whatever, I forget exactly what it was, but into like $40,000 during this time period. But my point is this, is that this was the technical turn date here, which was again predicted on August 4th. So let's go to another one here. And this is on September 3rd, 2015. Now, what he was looking for, there was high volatility around 917. So again, this is 2 weeks beforehand. He was looking for it, and it was supposed to decline into the 23rd to the 25th, which would be the beige hole. So let's take a quick look. And here was the third right here. So this is after he already predicted this big drop. The third was here, and we were looking for the top on the 17th. And from here, we had this massive, massive drop in the markets, and the S&P dropped 150 points in a week. So this is what I mean by technical timing, as far as the dates and knowing what to do before they happen. So knowing that heading into, let's say here, that the market was supposed to drop, you wouldn't have listened to what the media was saying, and that the S&P was heading to 2150 or 2200. You would have been able to short the market because you knew this was coming. You would have known when the market was rallying here and everybody was saying the lows were in, that we were anticipating a big drop. Knowing this stuff ahead of time gives you, you're able to control your emotions. Now, when you turn around and you're able to add sentiment into the equation to see how everybody is feeling, it adds another aspect of it. And this is one of the charts I'm going to show you when I combine everything together, because we actually had technical divergences as well. So the I'm not really quite sure what this is here. I think I may have that one may have snuck in, but okay. So let's do this. I'm gonna just forget this one, so I'm gonna delete it because I'm not sure what that one's for. So now what I'm gonna do is I went over the the technical timing indicators. I went over sentiment. Now what I want to do is I want to incorporate everything together for you guys to show you how I trade it and how I use it. And I try to teach people as much as I can the technical aspects of things. I can't, I can't teach you what Woody does because I don't have that information, but I can teach you how I use the information that I get. And if it's something that works for you, then we can keep an open dialogue, and I'll continue to show you how I feel. So, as I said, the market timing matrix is time, sentiment, and price. So let's go back to this is the 9-3. This is the one I showed you where the top was coming on the 17th. So as you can see here, we knew the time was coming on the 17th. Now this is the sentiment chart here. See, notice how we had a 90% bullish reading. Notice how we had a 92%. So we knew that this was the top date going into it. We knew traders were very, very bullish on this market. And now what I want to do is show you what was taking place with the technical aspect of it. And you can see that the S&P was making a higher high as the technicals were making a lower high. So this is what a bearish divergence is. As you can see, the angle of these technicals are heading down as price is heading up. Now, a bullish divergence is when we have price that's moving down and you have technicals that are moving up. So this was your your bearish divergence. You can see we had a moving average. We broke above it, but on a daily basis, it actually hit right there. So we know that we had time, 17th. We know sentiment was at extreme bullish, and we were looking for a move down. And from here, we had bearish divergences. So that is the matrix part of things where you have your time, sentiment, and price. That was telling you not to buy into this, the move. And if you remember, I think the S&P was up some 30 points that day. It was an FOMC meeting. And your whole thing was if you just believed in the matrix and the system with with the sentiment, time, and technicals, if you just turned your TV off, didn't read anything, and during this move after the Fed left rates unchanged, and you were shorting this entire move, by the time the market closed, you were up a ton on it, and I remember because I was on this one here, and we know that the S&P dropped 150 points in a week's time frame. So that is a big part of how I use this thing is that, knowing when to expect a turn, seeing how sentiment is, how our traders feeling, and are we having technical divergences? Because if we didn't get those, there's a chance that we would have gotten a pullback and then we would have went back up again. But eventually, it wouldn't have meant that you wanted to be buying it if we got the rally, because we were still anticipating the move to the downside. So this is let me just move this up here. So this is a little bit closer to home right here, and this is on January 19th. So during this time period, what he was saying was that declines have always been due into month end, are now profiling for a low near February 5th to the 8th. So this is, you knew going into this that, that we were anticipating some type of low coming into this time period. Now, so we knew we were anticipating a move higher. Look at sentiment. We had a bunch of very, very bearish sentiment readings. If you remember, just going back, last week and starting to listen to what the financial media was talking about, and most of them were saying just get out of this market where we're going lower. Well, anybody that listened to them, instead of anticipating that we were going to get a rally, we're up over 100 points. But being able to anticipate that this rally was pending, knowing that everybody was bearish on the markets, knowing that we had a technical turn date that was looking for an up move, you just had to turn all of that off, and the only thing you were doing were trying to figure out where to buy. So let's actually go and take a look at what was going on. So this was the 8th right here. This is the first move down. So we did get a nice bounce off of that. But the problem was this. Remember the bullish divergences. Bullish divergences are when technicals are making a higher low as the price is making a lower low. So going into this 8th, this turn right here, we didn't have any bullish divergences. Yes, we got a nice bounce off of that, but this low right here triggered the bullish divergences. Now, notice where the low came in, pretty much right at support right here. So this was your, the way that I made these trades was I got long here on the 8th because, this was a turn date. I just held things, and then when we made this secondary low, I actually got long pretty much right at the lows, and I started closing right here. So it was a great trade on it, and the reason why, one, we knew that there was a turn coming during this time period, so it didn't come on the 8th, it ended up coming on the 11th. I forget the date on it, but anyway, we are at support and we had bullish divergences, and from there we saw a very nice move. Now the pattern that I've been following, and I still believe this is in play, is that this move here was, and this is going all the way back from January, this was your wave A, We're now making a wave B, and then once this completes, we're going to make a wave C that will take these lows out. But the problem is that nobody's really believing in this rally right now. So you can see why shorting right at this particular time is probably not a good idea. But what you want to do is let them suck in more bears. How are they going to suck in more bears? They're going to give us some kind of drop sometime, maybe. We'll see. Again, if it doesn't, I'm not short. I'm just missing more of the gains I could have had. But if we get that nail biter to the downside, what it's going to do, it's going to have because nobody's really believing in this right now. They're all trying to figure out where to start shorting again because they've been trained for that. So if we get the drop, everyone jumps short. If they don't know when to expect the actual turn, which we know, I know exactly when the top is supposed to be in place. They're going to get sucked in and they're going to start shorting this move. And then what happens? This is all of your fuel that's going to take the S&P probably up to the 1977, or I would not even count out that, you can see the S&P as high as 2040. I know it sounds crazy. It sounded crazy that the S&P was going to be at 1900 here, and we're here in a matter of days. But my point is that if you don't know when to expect a top, how can you start making your trades for it? If you know when to expect the top, now what you want is we want to start tracking when sentiment's starting to get into the bullish levels, when we start seeing the moving average on sentiment moving up. And once it's there, and once we're in our time period that to expect a reversal, that's when you start picking where the top is going to be. And when that happens, that's when you start shorting. And until then, you want to use these moves to buy the dip. And you're not going to get your bullish divergences on the 60-minute chart on here because we're probably not making new lows. So you want to move over to your shorter term charts, your 15-minute, your 5-minute, and when you start seeing the bullish divergences on there, you start figuring out where support is and you start building your long position, and that's it. And then from there, you just wait for some type of low to hit, and then like I said, the odds of seeing the S&P trading near the 2000 level, I think, are a lot higher than us taking out the 1800 level. So are there any questions as far as with what I'm talking about right here? And hang on one second, I'm just trying. Oh, here it is. Okay. So yeah. So are there any questions? I'm going to go through these right here. Hang on one second. Okay. After 9/17, the market took off. Well, yeah. If we just go back and look at this, remember what he was saying. 9/17, and then from there, he was looking for a low to come in between the 23rd and the 25th. So the top was coming on the 17th, and we were looking for a low to come in between the 23rd and the 25th. It came in on the 28th. So yeah, that's exactly what we were looking for. Sentiment today is 86 on the chart. Let me take a look. I forget. Man, these things are a pain in the butt. Okay, so yeah, it's 86% today, but it doesn't mean anything. It could be, if we could have 98%. What that would tell me is, okay, we have a pending little pullback, but 86 is not really extreme in any way, and we really don't have a turn date that's approaching yet. So again, sentiment has to be interpreted, and it's right now I wouldn't be using it to be looking to short this market. How do the dates on the chart line up with price and sentiment line bars? You mean are you talking about the blue line, Ken? Like these right here? Well, that's the moving average for Woody. So he puts these charts together. So this is a moving average. So even though we have say a 3% sentiment here, this was the daily sentiment, but the moving average you can see was still going down. So this is just a moving average of the sentiment readings. So that's all it is. So they're not going to line up all the time with exactly like this, but that again he that's why he explains things about the about sentiment and what he sees playing out. It's not, again, something that you want to just jump on once you see a high or a low sentiment. It's not a go short or go long, but when it starts to line up with things. So let's say today the market closes strong like it is right now. So if it's strong, most likely we are going to get a pretty high sentiment reading. So I'm just going to go to a regular chart and go to a 15 minute. So 15 minute, we had the bearish divergences going. This wiped them out. So if we get a pullback and then back up again, we're probably going to get some bearish divergences on the 15-minute chart. And we're already pretty overbought right here. So that would, again, kind of tell me that, you don't, I wouldn't want to be chasing this, but I should have just held on to my long positions, and I would have been up a lot more than I was, at the close yesterday. But like I was explaining, we had the bearish divergences in place on the 15 minutes. So the rolling of the dice was either we were going to get a quick drop down and then up, or we were just going to melt up like this. And obviously they took that route there. So I just missed, because like I said, I got long and I got long pretty much right at the lows on it, and I took my profits here. So yes, I'm missing this part of it. Am I short? No, I'm not even considering shorting right now. So how Woody decides the turn dates will be major or minor. Well, it's kind of it's kind of hard to explain that, because he's been saying since August, and if we just go to August on my chart here, and this was August going here, he was saying the bear market started all the way back here. And remember, the S&P was not too far from all-time highs. Nobody was looking at a bear market that was starting right here. And he has been saying that in 2000, he's going to be bullish on this market, but not until 2017. So 2016, we're in a bear market. Now, what does that mean? It just means that we're going to make a series of lower highs and we're going to make lower lows. Does it mean that we're going to crash? No, well, we don't really look out that far. We're looking out for the moves on this. We're looking for the moves here, this. We don't, going out and predicting what's going to happen 3 or 5 years from now, it's kind of useless, because how do you even trade that? Because, you can sit there, and if you knew that, okay, we're in a bear market and you're just going to short everything. I mean, if you remember going back into those, the heydays of 2007 and 8, I mean, you were holding on to the S&P that was rallying 250 points in 2 days. We're more looking for these types of moves. So overall, the trend is going to be down, but we're going to get these moves here, and getting long here has been very wise. Getting short here worked. Getting, short here worked. So we're looking, with the way that these markets are moving, where we're getting 150, 200 point moves in the S&P in a matter of a couple weeks, um, you can make a lot of money really, really fast. And I'm not, that's not my style. I trade right now. I used to do the options, and I had to step away from it, because if you're off on time by 2 days, your options are getting absolutely destroyed. So I switched to the SDS and the SSO. I haven't had a losing trade yet since I made that switch, because the direction was always right that I was looking. But being able to hold on to an SDS or an SSO, which is the 2-time leverage spiders trades, being off by a day or two, it wasn't really that big a deal because I wasn't losing time. So it was making that switch is worked out very well for me. And I'm looking, if I can make $1,500, $2,000 on a trade, that's fine with me. If I can make, turn around and try to make 50 of those a year, and it's a pretty good year. So, alrighty. The next turn date that we're looking for is it's coming. What is today? Today it's sometime next week. I think the 20. We're looking for a top to hit sometime around next week, around the 25th. Ba, 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 ba. Are you looking for a low? Well, it's not. It's we'll cross that bridge when we get there. I think that's probably the best way to put it, John, because let's say all of a sudden we start getting bullish divergences when we're only at 1780. Once we're closer to when the low is anticipated, then it's easier to give you a price because you don't, how do you know we're not going to get another one of these moves, and that comes down, and by May, we're already down to 1650. Then that means that most likely we're heading down to 1400. But let's say it takes its time and we get bullish divergences on the daily and the 60-minute, but we're only at 1780. Then you start looking at, okay, that's where support will be. So instead of taking okay, it's going to end here, or it's going to end here, or it's going to end here, you just take that out of your head. It doesn't really matter because you're going to be able to get into the trade before it happens. So anticipating where it's going to be by next year, that doesn't even cross my mind because I'm probably going to be in and out both long and short 25 times before we get to that final date. Okay, yeah, but again, John, this is just I'm trying to, how can I explain it? This would make sense. Can this totally be erased and totally wrong? Absolutely. This right now is just something that I've been following, and so far it seems to be following it. Am I married to this? Absolutely not. I'll be the first one to delete these off and say, okay, we're heading here. So this is just something, a visual to see if it does happen, it would make sense. But again, I'm not married to any pattern. I'll just let things, play out the way they are. So, actually, you can, yes, you can. For me, it's just, the SDS and the SSO. Um, I'm just using those. You got some people that follow me use options still. It was too hard for me to be able to, like I said, when you're off by a few days and you're trading options in this market, you're you're getting absolutely crushed because the markets are moving so fast, and a few days can absolutely crush you. But yeah, you can use whatever you want. So that, and again, anybody one thing that I've been doing and I will continue to do is I run Markets Path, and I've been doing that all the way since 2004. And anybody that joins, the sentiment timing, it's a free. I'm just giving it to you. There's no charge for it. And really, it's more what I was just going over with you guys, with the technical aspect of things. I'm just technical on it. So, I'll do the nightly reports. I'll do the morning notes just to give you a heads up of what I see. I email the trades that I'm making, whether you want to follow them or not. That's totally up to you. And we have a trade room that actually has some really, really smart traders in there. So that's something, that I just kind of added to the entire, sentiment timing piece of it. But I want to just go over this real quick, and then I'll continue to answer questions. But we run specials all the time, and we actually have a marketing company that's in the we're in the process of working things out. They're really pushing for us to raise rates because they want us to get more of a, not institutions, but your professional trader involved. But right now we're still working stuff out with them. And one of the things we don't, I get asked all the time, why don't you give free, couple weeks to try things? And honestly, I mean, I can give a free month. It doesn't really make a difference to me. What I've done and what I've studied in the past is it just it brings us riffraff is probably the best way to put it. You get these people that try to sneak in and try to get the free, 2 weeks, and what happens is we have our system tracks IP addresses from people that sign up, and it ends up being a complete nightmare. And so, we really don't offer anything like that, just because the way that I look at it, if you don't know, if you can't see the advantage of having someone like Woody Dorsey, guiding you through these markets, and our service isn't for everybody, and we just we don't want those people that are just testing, because we end up they're going to leave anyway. It's just the way it is. I don't have a rhyme or reason on it. They just do. But so we don't. But this is the closest that I've come to it, and it's a special that I'm running right now just for people in this webinar, and it's $1.40 for 14 days, 10 cents a day. There is no rhyme or reason on why I gave you that number. Just 10 cents a day sounded pretty good. So if you guys are interested, it's I'll actually see if I can post a link on it. Okay, here we go. Copy. So paste. I don't know how to do this. Bear with me 1 second. I want to just see if I can get this. Chat. Okay. Paste. Okay. So it should be in the chat part. You'll see it. Click on it. This is the special that we're running right here. It's like I said, 14 days for $1.40, and just use the coupon code for that. But okay, so let me get back to this and go here, and I'm going to answer the rest of the questions here. Hang on 1 second. 2 weeks for $1.40. Oh, I'm sorry. What we do. It's after the 2 weeks, our regular rate is $149.99 a month is what we charge. And you'll see when actually, if you just go to our, bear with me 1 second. I'll put this in here. Hang on 1 second. Join. Copy. So, and there's where you sign up for it. So, but yeah, like I said, if you guys are looking at the chat part, those are where the links are. If not, just send us an email at info@sentimenttiming.com. I'll be more than happy to send you all that information on it. When you switch to SSO SDS, what expiration of the options or time to get? Well, that's the thing, John, is that I'm not trading options with those. So I'm just trading SSO and SDS. So there is a time factor that is attached to them, but it's if you hold it for months and months on end, and I don't. it's, if you hang on to an SDS or an SSO for 6 months, you're automatically going to get a time decay off of it. I don't ask me how it works. I have absolutely no idea. Uh, but I'm not holding on to those for that long. My trades, if they're the longest I'm really holding on to them is anywhere from 3 to 4 weeks. So time has nothing to do with it. It really shouldn't have anything to do with the trade that I'm entering. But the options, yeah, they did. So how you trade the options, it's if you're familiar with them, you'd have to pick out which one you feel most comfortable with. What about when you're using options? Well, that's what I'm saying. That's why I'm stepping away from it. Uh, it just it was too hard for me to be able to manage. Like if I'm just trading for myself, it's a lot easier because if I turn around and get into something and it's wrong, like I get out and if I lose $400 or $500, I lose it. But when I'm trying to manage that with through email alerts for the people from Markets Path, which that's what I mean by managing it. It just it was too hard because people are getting emails 2, 3, 4 times a day. Okay, get in here, put a stop. So the SSO SDS just makes things a lot easier for me to manage and be able to take advantage of the moves instead of worrying about if we're going to get a big drop and your options are up $3,000 and you wake up and they're up 500, so the SSO, SDS just make things a lot easier. But like I said, you could trade options. You just really, you would have to figure out which ones you would want to use on your own. So it was the expiration. Oh yeah, yeah. Not, well, that in it's like I said. I mean, you could looking for something to turn because I'll tell you what, this would be a perfect example of what I'm talking about would be, let's say that we were anticipating that the market was going to turn, right? So here you have bearish divergences in place when it was going up here. We're at resistance, and you have a day today that the S&P is up 30 points. Well, if you bought options, if you bought the 189 SPY options, those you may have paid $3 for them and they're worth 50 cents right now. It was this one day crushes your options on it. Where if you have let's say you got into SDS, you're down 3%. It's not, the end of the world on it, but you could be down 80% on options because of this one move. And that was really, yeah, it was the expiry. When I kid you not, I was right on the actual direction on every one of the options I was making. But, when you're sitting there losing, when you're at a 50% win ratio, and you're right on direction all the time, is time to just stop. It's hard enough to predict which way the market's going, but then to predict it that it has to happen on this particular time period, it's hard. It's and I just thought it was just unnecessary pressure that I was putting on myself for those. Do we have to become a member of Markets Path, or it's combined? It's free. So once you sign up, if you signed up for sentiment timing, it automatically brings you to a page, and everything's done via email. I mean, if you wanted to just join Markets Path, I don't even have it on there for I have had members since 2004. When I started sentiment timing, I kind of just left members as is and haven't really tried to recruit anybody. I've just been going through doing the sentiment timing. I mean, if you wanted to just join Markets Path and not sentiment timing, you could send me an email. I'll give you some prices. But sentiment timing, when you do that, it's free. So as long as you remain a member of sentiment timing, the Markets Path is free. Yes, there is a trade room. It's pretty good. I'm not gonna lie to you. I'm in and out of it. I'm not. So I don't want to mislead you guys here. The trade room is not something that I'm in there all the time. I have so many meetings and webinars that I do that I'm getting ready for them. But we have some traders that are in there that trade oil, that trade gold, that trade futures, options. They're really, really good. And there's some people that are really good with Elliott Wave that are in there, and they post up charts. So it's I've had the trade room forever, and it just kind of has warped into it's an own community for a bunch of people. And like I said, I'm in there once in a while. I'll throw in my 2 cents, but I let them do their stuff, and some of them are fantastic traders. Well, it's all part of the. That's once you sign up for the sentiment timing, and you get the markets path stuff. The link is in there to get access to the trade room. Yeah, like I said. I mean, the one thing that I'll just stress is to have any type of trading advantage in this market. It's it's a must. And I mean, I can sit there because Woody's my partner and it's my business and stuff. But I'm not gonna lie to you. Having Woody on your side to be able to guide you through when the markets are going to reverse, and having the sentiment data, I promise you, you won't look at the markets the same. You'll be so much more relaxed about everything. Like, I mean, what we hear now is, I mean, probably 90% of the questions that I get are, oil's going down. Why do you think the markets are going to rally if oil's going down? Like, everyone tries to throw, because they're listening to the media on, what's going on, and they've convinced themselves that the market was not going to move up, especially when we were, making this move here. And my response to them was, I don't, I have no idea what's going on with oil. I don't trade oil. I trade the spiders, and the markets are going to reverse for the reason that we're looking for a low. Sentiment is low. We have bullish divergences. So now the market's up this much and oil's up. Who's following who is, the question. And one things that I've said to people where, though, because trust me, I get fan mail all the time. You grow a thick skin when you write a newsletter, but in any case, you get people sitting there saying that you know, it's stupid going against oil. Why are you looking for a low? And my response to them is, this whole oil trade. Do does anybody even realize that they're so off on it? It's not even, I mean, the media just really started picking up on it this year. So great. Oil's down, the markets are down. So they link it together. If it was really truly following it, I mean, the S&P would be at 500 right now. So they follow things when it makes sense and they have something to talk about. But I mean, oil's at all-time lows. So if it's at all-time lows, and the S&P is, at 1800, they're just following it because it's the flavor of the day. That's it. Yes, it may coincide with things now, but it wasn't a story when oil went from 100 down to 40 and the S&P was at 2100, but now it is going down, so they need to make an excuse on why the S&P is moving down, and they link it to oil. So it's, just one of those things that I kind of chuckle at, because news will always be after. It's just the way that they do it. Okay, let me just try to respond to some more of these questions here. How long max would you hold? I honestly, my max time on SDS and SSO is usually less than 2 or 3 weeks. I mean, a lot of times when I get, when you get long SSO down here and you're up 1,300, $1,400. I mean, I only trade 500 shares of it. I don't go crazy on these. But when you're up, 12, 13, $1,400, 1,500, like I said, I just step out of them. I was in it. It was a very, very easy trade. Made my 1500. Now I'm waiting. I'm gonna practice, very patient style trading. I'm not gonna chase this. If it keeps going up, then I'll wait until our next turn date and look to buy SDS for the downside and just stay cash until then. If we get a pullback, then yeah, I'm going to be looking to buy the dip and go back into SSO for the next move higher. Um, Alrighty, is there a trade room? Yes, I already answered that. Do you have a similar service for other markets? No, we don't. Or it's strictly we just do the the S&P 500 in the U.S. markets. So, but that's we ran a little bit longer than an hour. Hopefully, did you guys find this useful on it? I mean, I try not to make it a big sales pitch, but we are a for-profit service. So I want to, this is what we're going to be doing is, and Woody, like I said, is traveling right now, but something that we've been doing for the members, and we want to continue to do it, is have a little round table either once a week, once every 2 weeks for members to go over the reports and to get into Woody's, to hear him, what he talks about. Um, and then these types that that I do is more of an informational piece for people to understand the service and what we do and the importance of sentiment and controlling your emotions. And then from there, the stuff that we do with Woody, the round table, is more questions that you can ask directly to him. But um, well, it's all you'll get it when you sign up, and I send you the link for Markets Path. You'll have the link for the trade room. So it's like I said, it's a cool place. You're free to speak your mind in there. People are really good. But is there any other questions that I might be able to answer? Oh, no, you're welcome, John. I like I said, I enjoy doing these. It's kind of weird. I do so many of them on a monthly basis now that I didn't start even coming sitting down to this thing until 5 minutes before it started. I remember when I first started these things, 3 hours, I was pulling my hair out, figuring out what to do. But they just become a lot more relaxed, and you guys ask great questions. And like I said, we're all in here to make money. We're that's really the number one thing is to make money in this market. And I don't. It's been like I said, you'll notice when you start seeing it, you'll view these markets a lot different than everybody else. How come I have not come across? I don't. You can Google him. I mean, there's. I mean, he's not a. How? I mean, the thing is that how do you know? How do you find out anybody? I mean, unless they're on in the news and stuff and on TV, they're. That's where they get the notoriety. But he's not a big. Yeah, like I said, he's been on CNBC. He's been on. He does more newspaper stuff. But he's a quiet person, does his stuff, and that's it. And I have a feeling you're going to start hearing more about him just because I'm more on the marketing end of things with him and trying to get the name out there. But I mean, you can Google him. He's been all over the place. He's been around for a while. So, but that's about all I have for tonight. I appreciate if you guys have any questions. Just send me a email at info@sentimenttiming.com. I will be sure to get back to you as soon as I can. And when you see a pot of gold, yeah, I'll tell you, that's another thing that a lot of people ask for. They're really into the oil and the gold, and that may be something down the road. But right now, we just do the S&P 500. And if you really take a step back and look at things, I mean, you can right now, you know that the S&P is going to go up. Usually gold goes down and oil goes up. If it's going to go down, then gold's going to go up and stocks and oil are going to go down. But it's all good. But anyway, that's all I have. So again, thank you guys for showing up. And if you guys have any questions, just be sure to ask me. I'll talk to you guys later.